So TLG Capital, we've been around for a decade plus. So we're kind of one of the funds with a longer track record on the African continent. And we've done at this point, it's 41 transactions in 20 African countries. And we just hit our 30th successful exit 2 weeks ago in Nigeria, which is pretty exciting. And I think when you look at the heart of what we do, we're trying to figure out how to do investments in Africa with a reduced risk profile. When you see an African entrepreneur announcing a raise or announcing a 1 million in ARR or something like that, like people don't understand the effort and the pain, that goes into doing devaluation. I mean, if you just take Nigeria as an example, I think that you've hit broadly a period of currency stability. I think the central bank under Cardozo has done an extraordinary job at stopping what was a potential free fall. You are seeing more interest in crypto. You are seeing more interest in particularly using cryptocurrencies as a portal to FX convertibility. Converting from Naira into stablecoin into dollar, converting from Kwanzaa into Bitcoin into dollar. In Africa, the law of the minimum is data availability. It's information, because it's a complicated issue. How to improve educational outcomes. I think it begins. It involves community. It involves different companies creating programs around it. I think every actor in the ecosystem has a role to play. Again, it's a really important barometer for international investors is just how stable are the banks and how effective are the banks at maintaining a solid framework. The number one thing that I see as a problem to African businesses is liquidity. African companies aren't able to raise the liquidity to solve the problems that they have.
Welcome to Africa Tech Talks, where we explore the minds and strategies shaping Africa's entrepreneurial and investment landscape. Today, we are honored to have Isaac Marshall, a senior investment professional at TLG Capital. Isaac plays a pivotal role in driving innovative credit solutions for startups, SMEs, and cross-border ventures across Africa, helping them scale into industry leaders. With a background in fund management in Israel and macroeconomic advisory at Goldman Sachs Asset Management, Isaac brings a unique blend of global expertise and local insight. At TLG Capital, he is instrumental in bridging the credit gap for African entrepreneurs, leveraging structured debt to unlock growth in challenging markets. Isaac's vision for Africa's investment potential is both bold and practical, with a focus on sectors like tourism, agri-processing, and marine services. Join us as we dive into his journey, his strategies for navigating Africa's dynamic markets, and his perspective on fostering sustainable growth through innovative financing. Okay, so Isaac, could you start by telling our listeners a little bit more about TLG Capital and its investment philosophy, specifically within the African continent?
Yeah, absolutely, Ivo and Andre, and thanks for having me on. So TLG Capital, we've been around for a decade plus. So we're kind of one of the funds with a longer track record on the African continent. And we've done at this point, it's 41 transactions in 20 African countries. And we just hit our 30th successful exit 2 weeks ago in Nigeria, which is pretty exciting. And I think when you look at the heart of what we do, we're trying to figure out how to do investments in Africa with a reduced risk profile. So practically, we do a lot of private credit. When you look at the investor base that we have, it's primarily commercial capital. So the majority of our investors in our funds are folks who have not invested in Africa before, and many of whom it's their very first time investing in Africa. And they don't necessarily have an impact mandate. And so for us, it's about catalyzing commercial capital to invest in high impact projects in sub-Saharan Africa. And when I say high impact, we're talking about healthcare, we're talking about recycling, we're talking about agriculture, anything that is creating wealth and impacting life in a positive way for the average African. And to accomplish that, you have to be pretty creative because, as you know, these are not very easy markets to invest in. But we're happy at this point to have IFC, Swedfund, Norfund, and BPI France, who are kind of the development community anchoring our next fund. which sort of catalyzes a $200 million platform to further deploy into these types of deals.
Very well, very well. So, you emphasize that businesses in Africa is driven by incredible entrepreneurs and not philanthropy. So this highlights their resilience. Can you expand on what qualities can make the African entrepreneur, perhaps those that you've seen in Nigeria that you've recently exited, or Tanzania, particularly adapted or navigated in this complex environments?
You know, Andre and Ivo, I think the entrepreneurs you encounter in Africa are the most resilient and frankly the most entrepreneurial people on the earth. I think there's a saying in all spiritual traditions that I think is just fundamentally true, that the more difficulties one sees in the world, the more perfect one becomes, right? Is the core idea. And I think the truth is that the market conditions that people operate in, look, the ability for a 22-year-old in Silicon Valley to raise capital compared to the ability of a 3-decade experienced entrepreneur to raise capital in Ghana, it's a completely different universe, right? And I think that's the fundamental challenge. But there are so many corollary challenges, right? You have the fact that there is more diesel generator power than state utility power in the core markets that we operate. You have the fact that there is not enough liquidity in the banking sector, and that banks need partners. They need the ability to craft more effective solutions. You have the problem that in a lot of these jurisdictions, um, the private sector and the government could do more to partner up. I mean, doing things like ensuring security, ensuring infrastructure functions properly. These are all challenges. And so I think when you see an African entrepreneur announcing a raise or announcing a 1 million in ARR or something like that, like people don't understand
The
the
hardship.
effort and the pain, yeah, that goes into doing that.
Yeah, yeah. Changing a little bit of the topic and agreeing completely with what you just said. Looking back to 2023, we saw a significant currency challenge, and so the kwanza devalued for around 40%. The Nayara is facing the same kind of pressure. You mentioned before in other interviews factors like import resilience. Bringing us to the present. How do you see the current situation evolving across key markets, and have the stabilization measures in Nigeria, for instance, held up?
I'm super optimistic on, I would say, a lot of the core African markets at the moment.
Okay.
I think there's some challenges. Look, I think the past 5 years have just been a crazy roller coaster ride, right? I mean, you have Ghana's sovereign default, you had Zambia's sovereign default, you had Ethiopia's problems, you had massive currency devaluation in Nigeria, massive inflation in Nigeria, high currency devaluation even in stable markets for places where people think are stable, right? Kenya, Uganda, Tanzania. And Angola obviously was not spared. I remember I was in the airport, and you always know that there's a parallel exchange rate when people come up to you in the airport offering to buy your dollars for local currency, for Kwanzaa, at the rate you see on Google. Because if they're offering you the rate that you see on Google, then there's some there's some issues there. And I think, look, that devaluation. I mean, if you just take Nigeria as an example, I think that you've hit broadly a period of currency stability. I think the central bank under Cardozo has done an extraordinary job at stopping what was a potential free fall and serious repercussions to the banking sector. Liquidity is broadly restored. I think you can convert dollars and naira at an ease that I've never seen before. In my career doing Africa, I don't think TLG has seen it before. This is the first in the history of Nigeria. This is the first ratings agency upgrade. There since Nigeria's sovereign got its first Moody's and Fitch ratings, it has only been downgrades until the latest upgrade. And so I think, you know, At the same time, these markets are not straightforward, and I'm not, I'm not advocating that people plow into kind of local currency equity, or I'm not advocating. I think the reality is that you have to kind of figure out your spots where you're deploying into. But for folks who are building, I think it's probably one of the best times because we're at the bottom of a cycle for so many of these countries.
Yeah, that's interesting. So you've been here. Your Luanda is in Angola, which is a Portuguese-speaking country, and here Portuguese is still key for business. I think you got that impression too. Of course, you have already got a lot of people still, doing things in English, but I think in this market sometimes you don't get a lot of info out because mainly of uh, the media, it's everything still happens in Portuguese. But tell me, you visited Angola last year. What do you think? What excites you the most? The specific sectors and opportunities that you see that are more um, exciting for you in Angola.
At the moment, I think the thing that really struck me about Angola is for so long, it's been talked about as this very challenging to invest in, very closed off market. And I think frankly, that has been true. I think it's been difficult to deploy capital into. I think at a very basic level, the FX convertibility, your ability to move between dollar and Kwanzaa, even your ability to lend in dollars, the ability to source dollars is tricky, right? So, but at the same time, when I went there, I was super impressed by the dynamism of the banking sector. I think the banks I met were super duper hungry and keen to deal, and now you have this wave of privatization. So I think will only accelerate that dynamism and that momentum. I was just very impressed with the executives we met. The other institutions. I think the country is hungry to do more. You obviously had the visit from Biden last year, which I don't think is just a political gesture. I think you'll see continued focus by U.S. administration on Angola because of the Lobito corridor and because of as folks think about access to minerals. And I think that the country is really positioning itself well, and the entrepreneurs are building so many exciting endeavors, and so in that process. We met with a couple startups as well that are doing really innovative things. Vehicle financing, some of the classic stuff you see in other markets, but just has not been really done in Angola. So I think that there are many barriers, but the thing I'm most excited about is just the dynamism of financial institution players, because that's the barometer of the whole country. I think if the banks are trying to create solutions, then you'll see liquidity flow into the other sectors, is what we find. I think there's opportunities in tourism, there's opportunities in manufacturing. Stuff has to be cleaned up, right? I think stuff has to be prepared for tourism. I think you're right. The Lusophone, the sort of Portuguese speaking element is but for a lot of people that's exciting. I feel like a lot of people would love to go to Angola as tourists, but it's not, the infrastructure is not built out. It's not a place that people know to go, but though the natural beauty is there. you know and I think the last point I'd say is just manufacturing, import substitutes, right? That's another big sector.
Indeed. Indeed. Um, I dare you to switch gears to technology, and you're a brilliant on crypto, and you get its two perspectives. So you distinguish the speculation and crypto speculation and the ability of crypto to solve problems and to be able to address the problems that exist in the continent and hopefully in Angola. Can you elaborate a little bit more on how can this cryptography technology can solve the tangible problems that you've faced and that in the continent?
It's a really good point. I think this idea that I mean, sometimes people talk about crypto, but really let's like get at the heart of what it is, right? Is it useful to have a means of transacting that is off rails of the government, right? Is that a useful thing? Well, in jurisdictions where people don't necessarily trust that either local government or sovereign actors are going to act in the best interest of the currency, um, then maybe yes, right? And I think, I don't want to speculate about what countries that's more effective in than others, but I think overwhelmingly, you are seeing more interest in crypto. You are seeing more interest in particularly using cryptocurrencies as a portal to FX convertibility. Converting from naira into stablecoin into dollar, converting from Kwanzaa into Bitcoin into dollar. And naturally, look, regulators are going to have some challenges with that in the local markets, and they've been really, really clear to try and stop crypto off ramps. And I can't entirely blame them, right? Because the other problem is that when you allow transactions to occur outside of government purview, that also becomes a means for non-state actors with potentially violent intentions or aggressive intentions to coordinate their activities, right? And governments have an interest in trying to protect against that. So that makes sense to me. I don't necessarily think it's a malevolent thing why governments are trying to control cryptocurrencies. Um, but that being said, I think look, the technology behind blockchain is quite exciting. I think if it makes it easier to get currency convertibility down, to get more liquidity in the system, I think that's an exciting framework.
Beyond crypto, tech is a key factor to improve payments, tracking information, and ensuring that data authenticity. So, where are the low-hanging fruits and opportunities for technology to make a significant impact for businesses and individuals?
Yeah, so Andre, this is a really big one, because in ecology there's a concept called the law of the minimum. And the law of the minimum is this idea that the growth of a plant, the growth of a forest or vegetation ecosystem is constrained by whatever nutrient is in shortest supply. So in other words, whatever is most constrained will ultimately constrain the entire ecosystem to its cap.
Yeah.
In Africa, the law of the minimum is data availability. It's information, right? The foundational problem that investors have, the foundational problem that operators have, that anybody has, is that we don't know enough about the companies that we're investing in or trying to build, and we don't know enough about the sectors that we're operating in. There's not benchmarking, right? There's not enough data. So when problems happen, it's very difficult to tap into a repository of case studies to know how to deal with them. And that's true in every single sector, right? So I think one of the things that technology has the opportunity to do is, to the extent that it improves documentation and institutional memory and then portability of that information across different institutions, that's extremely powerful. Extremely powerful. Because, if everyone can have better understanding about what the risk is in a particular transaction, and what case studies look like, that improves the game for everybody.
Yeah, credit, for insurance, for everything. Indeed.
Yes.
Indeed.
Yes.
So in order for this tech revolution to be more efficient, there is the need for education in data science, cryptography, and other tech areas like AI, for instance. How critical is developing this local talent pool for leveraging this technological opportunities, and what needs to happen to accelerate this to a point of, in your point of view?
I actually think it is one of the most important elements, education, and it's least talked about. Actually, it's really cool to hear you saying it, because I don't think people talk about it very much, if any, if ever. Right? I think people often talk about how funding is the barrier. I don't think funding is the barrier. I think if returns are there, then funding will come. To be totally honest, I think funding is not there because the returns have not been there. Um, I think I think when you look at education, what the opportunity is that if you are a Nigerian company or an Angolan company and you are paying for a tech team based in London or a technology team based in Portugal, you are running a very high expense base in hard currency while your revenues are in a local currency that depreciates. the result is that this puts an enormous strain on businesses. And when you look at a lot of the tech failures that have happened, it's partially because they had these really large offshore cost centers. Um, and at the same time, we were talking about the amount of young people. There's a lot of young people that would be really, really hungry to learn the technical skills. And so I think that's a massive question, and that's one that probably is, you could dedicate an entire talk to exploring, because it's a complicated issue for how to improve educational outcomes. I think it begins, um, it involves community, it involves different companies creating programs around it. I think every actor in the ecosystem has a role to play.
Okay. Okay.
Yeah, fantastic. Yeah, thank you, Andre. So let's look at the future, Isaac. In terms of real economic growth for African investments. So if you look ahead like 3 to 5 years, sorry, what are the key trends and developments that you are currently closely watching?
Yeah, it's a good question, Ibo. I think the first trend that I think we're continuing to watch, because again, it's a really important barometer for international investors, is just how stable are the banks and how effective are the banks at maintaining a solid framework. And I think the reason why the banks are so important is because the banks basically tell you the ultimate risk of any investment in Africa, right? So just to give a case study, if a company is going to be able to pay you in dollars, then you damn sure got to make sure that the banks are able to pay you in dollars, right? Because any corporate's ability to perform is going to be contingent on liquidity existing in the banking sector. And I think that bolstering liquidity in the banking sector is really important in a lot of markets today, because that liquidity isn't there and it's quite expensive at the moment. I think another trend that I'm watching, which is something that Charlie Robertson always talks about over time, is as different African economies begin to develop further, one of the dynamics that begins to take into play is that, you know, um, folks begin to save more because birth rates tend to decline as sort of wealth levels are going up. And when you have that declining birth rate, it does have an impact on the amount of savings that are available in the banking sector, on the amount of liquidity that can feed back into the economy. And there's a lot of folks that talk about, when you look at different economies, that plays a critical factor, is that demographic element. Um, I'm not entirely persuaded that that's the only mechanism of growth, but I think there's a lot of folks that talk about that as being a super important thing. To me, actually, the foundational question is institutions, right? And it's the ability of folks to impact institutions in a positive way. So, I mean, just at a basic level, you know, uh, if governments are not able to use their money in an accountable way, and if we cannot create a situation where instances of fraud, I mean, at a basic level, there was a fantastic paper by a guy called Leonson Ndukumanu from the University of Massachusetts at Amherst, and he basically found that something around 2/3 of GDP of African countries has left as capital flight. And when we're talking about capital flight, we're looking at, he did a crazy task where he added up the value of goods that was logged as leaving African ports, and then logged the value of goods as arriving at foreign ports. And basically found that on the same manifesto, there were much larger amounts of goods arriving than were docked at leaving. And, you can imagine that is the oil that's leaving Nigeria, which is the reason why Nigeria cannot hit their OPEC quota. And those are materials from mines and DRC and all kinds of, right. The numbers are astonishing. So I think when institutions are able to create a framework where um, people are protected and corruption is rooted out, and people have a safe and stable operating environment to take off. And I think that's the principal thing that has to happen for growth to be easy over the long run. I mean, the short term, we're continuing to work with banks and grant entrepreneurs. So
Yeah. So grabbing that portion of entrepreneurs and just to we're coming to the very end of our episodes, today's episodes. So you believe that African entrepreneurs are hold the destiny of their own economies, right? Uh, if you could give, would ask you for two pieces of advice. So first one, a piece of advice to an aspiring tech entrepreneur in Africa today, and one piece of advice to an international investor considering investing in the continent. What advice would you give to this?
it's a really thoughtful question. Yeah, yeah. I always say the entrepreneurs we work with have a much harder job than I do.
Mhm.
And maybe that's the piece of advice to investors, right? Is that I think to build a business in these environments, in any market, right, is much harder than it is to invest in businesses. I think in Africa that's definitely true, and it's very hard to invest effectively. By the way, so I think to build, it really requires you to focus on profitability. It really requires you to focus on locking in sales and locking in growth before you spend capital. I think the number one thing that I see as a problem to African businesses is liquidity.
Yeah.
African companies aren't able to raise the liquidity to solve the problems that they have. And so you need to backfill, you need to plan in advance to solve liquidity problems. So figuring out how do I get my buyers to pay me faster? Figuring out how do I get my sellers to give me more time before I have to pay them? Figuring out how do I make my proposition attractive and de-risked enough so that banks can participate? How do I strike partnerships to enhance the credibility of my brand? Those are the types of questions that I think entrepreneurs face. I think for investors, it's it's understanding that the market is about relationships,
Yeah.
and that the great deals come not because the transaction economics are perfectly thought through and you've analyzed the risks. Like great deals happen because two people come together and put a ton of time into creating value into each other's businesses without expectation of return. And when you have that attitude where you're just trying to create value for people, then amazing, amazing, amazing things become possible. Um, so I think that's the
Mhm.
heart of it. That's why what you guys are doing is so important, by the way, because I think that by putting a spotlight and sharing stories of African entrepreneurs and players in the ecosystem, it gets more folks involved. It builds the network. It builds the human resources that are looking and engaging in Africa companies, and that's exciting.
Well, thank you so much. That's what we are trying to do. Our little part, but let's try to help the ecosystem thrive. Um, Isaac, thank you so much for being with us and accepting our invitation. Uh, and hopefully, we'll have you here more times in the podcast. Your insights were very valuable. And thank you once again.
Absolutely, guys. So Ivo, Andre, you guys are excellent, and thank you so much for the well thought out questions and for your time today. Thank you.
Thank you, Isaac.
Thank you.
Cheers.